LMND is trending after delivering a quarterly report that meaningfully shifted the tone of the conversation around the stock. Following its Q4 and full year 2025 results, the company reported a Q4 loss, but revenue came in ahead of expectations, a combination that investors often view as a sign of operational leverage starting to kick in. More importantly, the underlying metrics told a stronger story than the headline loss suggested. The company highlighted accelerating enforcer premium growth, improved gross loss ratio, narrowing losses. Okay, for a business that has long been scrutinized for prioritizing growth over profitability, this shift is crucial. Investors are increasingly focusing on underwriting quality and loss ratio improvements, and the company appears to be turning a corner there. The narrative is evolving from cash burning disruptor to maturing insurtech platform with improving fundamentals. There's also the Tesla FSD discount, a strategic seen as a strategic wild card. One of the biggest sparks for investors, which is a big source of investment, is that the company's innovative insurance discount for drivers using full self-driving from Tesla. This move is strategically interesting for several reasons. It aligns with tech-forward consumers and positions the company as a data-driven insurer in the autonomous era. Opens the door to partnerships and differentiated underwriting models. Potentially expands market share in EV heavy markets. If autonomous driving meaningfully reduces accident frequency over time, insurers that integrate behavioral and vehicle level data effectively could gain a structural advantage. The company is clearly signaling it wants to be at the forefront of that shift. Okay, you can read more in the description box below. Okay, so the stock is showing a lot of has been showing a lot of weakness within a longer term bullish trend. Its 200-day moving average is sloping bullishly upwards. The 200-day moving average underscores its underlying trend. Okay, so this weakness began. Let's see, began. Let me guess. Something. Okay, wouldn't be a guess. Okay, let's see. This weakness began. Let's see, all the way back in 22nd of July, or there, sorry, 22nd of February of January. That's when it began. Okay, so a bounce is actually expected today, but it may not be what may happen. Yeah, so it's there's an indication that it may give up this loss it's printing right now, but let's see how all of that goes. Yeah, and saying that it may if it holds, if it expands, if it bounces, if it rejects this weakness, then there's a chance that we're looking at the strength remaining in place up till Friday the 6th of February. Sorry, 6th of March, but there's no guarantee that that will be the case. No guarantee at all that that will be the case. Yeah. Okay, so if anything, the stock is expected to trade below its declining 40-day moving average. Projections here are saying $85. That's an ambitious upper projection, and it's also this is also a pivotal projection. It was initiated on the 30th of January and still reiterated up till today amid declining prices. So the probability of it retesting 65.61, yes, is statistically higher than 50%. This was the close as of yesterday. Okay, let's see what we have. This rejection at 74.41, equally statistically very, very high. Yeah, this is the close as of Friday, the 6th of February. We have this rejection at 82.59. Yeah, equally very high, higher than 50%. What are the pivotal projection of 85.01, equally very high, yeah, higher than 50%. Okay, we are making progress. What of this rejection at 92.21? Okay, unfortunately, less than 50%. So it's good, at least statistically. It has there's a chance that it might be able to retest this pivotal projection, and this pivotal projection, the implication of closing above it, retesting it and closing above it, is that it may retest this rejection at 92.21, even though it's statistically it's less than 50%, but it's within all of that. There's still a lot, even with the probability of 0.1%. You still have you still have a lot can still happen. For a stock to print a new high, the probability of that happening before it prints that, the probability of that happening is absolutely, you could just see, just far less than 0.1%, because if it hasn't happened, you don't exactly know what you don't have all the parameters to determine that probability. As such, you are, groping in the dark. So based on what we have here, the 10-day moving average is indicating that momentum is going to remain volatile and elevated up till the 9th of March. Then after that, we are looking at the prospects of a decay in the momentum. Okay, so we can also have a look at other moving averages. I'm just going to jump to the 40-day moving average to see if it's going to indicate any stability. No, it's more of weakness. Let's see. Let's try the 200-day moving average. It may Let's see what's going to indicate. Okay, the 200 moving average. Okay, in the interim between now and the 9th of March, stability is what is expected. So this expansion that is extrapolated is not expected to really influence the moving average that much. Yeah, so there's a chance that yeah, maybe, yeah, we're also looking at the prospects of it getting a rejection. So yeah, it's not expected to be that much. Yeah, okay, so that may well be what may happen. Here it's saying that's going to be rejected. It's just a dead cat bounce. So the 200-day moving average seems to be suggesting that it may well be that. It may well be a futile expansion that may not indicate a resumption of the uptrend. It's more of a consolidation. Yeah. So yeah, more of a consolidation, if you like, as well, up till the 1st of April. Let's see what we have on its weekly chart. On the weekly chart, there are no extrapolations. Projections here are saying 50.21, 60.11, 66.22. Okay, let's see what the market grid is going to give us. So the market grid, let's see what we have. The stock is currently trading at 63.06. So it is down here in the support zones. It's opening up a buying opportunity. It's opening up a buying opportunity. 62.67 will deliver that. Will completely open the window, but it doesn't mean that it's not. It doesn't mean that lower prices will may not won't continue to print. Yeah, so that's things stand right now. Some are taking profit, some may be exiting the stock, some may be exiting the stock right now, or yeah, to minimize their losses. But also, some may also be coming in to buy this deep. You know, yeah. So ahead, it doesn't have that very much resistance. Okay, okay, okay. It has it has above 63, above where it is right now. We have 64.20 and then 64.47. Okay, that's a decent amount of resistance ahead. So yeah, that's a decent amount of resistance ahead. After that, we have 65 and then 66. So the resistance is just slightly above where it is right now in the form of 64.43 and 64.22. If it does that, if it surpasses those resistances, then it might breeze through 65, 66, even 67, yeah, towards $68. Yeah, if it rebounds, there's a chance that after surpassing the 64 level, then we are looking at the prospects of higher prices printing. Yeah, but let's see how all of this will go. And thank you very much for watching this video.